What's happening, traders, and welcome back to Shift Trading. Today is just going to be a brief breakdown of how I managed to get my additional funding through my Forex funds. This was a tough one just due to the fact that August wasn't the greatest month. It certainly isn't the way I trade. What I mean by that is there wasn't a lot of opportunities as what I see as my A+ setups. Nonetheless, I still managed to take two trades. So what I generally chat to with the guys in the community is that I look for 2 to 5 trades a month, which carries me comfortably on my accounts. And then in addition, I was trying to finish off the verification with my Forex funds. So again, you're going to get months that fluctuate. I took 2 trades, 2 wins, and that's enough for me comfortably. Essentially, where the biggest struggle comes from is sitting there trying to look for a trade every day. It doesn't make you a good trader if you're taking 20 trades a day with 50% success rate and just walking out with a bit of profit and extreme stress. So for me, I know immediately from the night before if the next trading day is going to set up and give me my opportunity. If it's not there, I don't trade London. That's it. I generally only trade London, but if the setup isn't there, I walk away from the charts and carry on with my life. It's nice having that mental simulation going. I only need 2 trades for the month. If I get 3, 4, 5, that's just an added bonus each month. So let's get into it. I think I've babbled on enough. So this is just a raw chart of where I executed the trade. What I'm going to show you is essentially how I look for my trades. Again, I look for the RCT power of 3. So if I have a good bullish close the day before, quite simply what I'm going to do is just get my Fibonacci. I'm going to draw it from my high to low of that day. I want to look for my trades in and around this area of here, not too deep a pullback. What I am going to do is find the separation of London and New York swings, for instance. What I mean by that is obviously we would have the charts opening, market pushing down in the day, continuing up, forming a London swing point there, pushing up into New York and forming a swing point like that, something like that. So I would go, all right, well, that's my New York swing high. This is my London swing high and low. So low to high, that's the main objective that I'm going to be looking for. So if I can identify these swings with the entire range of the previous day, I can identify swing high, swing low to high, and the premium of that and discount of that. So map that out, and then I'll take the London session. And within those regions, I try to look for my unmitigated zones, whether that be rejection blocks, order blocks, fair value gaps, anything really that suits my plan. And then essentially, like I've shown you in every other video that I've posted, we'll go into the central bank dealer range, look for that range, nice tight range into Asian range, and then hopefully when market opens up, 12 o'clock the next day, we will see market trade down into these high probability levels, trading up into the targeted liquidity and continuation in this fashion where we would see market again open, push down, trade up, and continue and just form another bullish candle. It's really that simple, guys. So like I said, I only had 2 trades for the month of August. Quiet month, summer, gets me my paycheck. So let's jump into it. What I saw here is I had a swing low from the previous day to swing high. Map that out with my Fibonacci. In this instance, it was quite tough to try and identify clear swing points from each session. We can see London session, we started just pushing up. New York just continued pushing up and then dipped down. Again, this still gave me a bullish close for the day where I was looking at market breaking highs and continuing in that fashion. We retraced into discount And then I had a strong fair value gap over here in my discounted zone. Again, I know a lot of traders do not like the fact that I say supply and demand, but it's just what I've traded for 5 years and incorporated a lot of ICT's terminology. So for me, this, I know a lot of you guys will say it's a low to the high to the low and whatever else being a breaker block and so forth. To me, this is just a strong demand zone where market has broken down, swept liquidity in this zone, broken minor structure, and the start of breaking swing structure over here. So to me, this is my high probability demand zone. What makes it high probability is two of the factors that I've mentioned over there already. Breaking the minor and swing in a discounted pricing, leaving a fair value gap as well, and has inducement just above it. So again, I have put a video together showing what makes high probability trades for me, or high probability POIs. If you want, you can just go back and look into that. All right, so I saw market tapping into this fair value gap, playing around here. Market then broke up. You could have potentially taken shorts over here. It's a bit aggressive. I had one member in the community take a sell, and he was done for the day. What I was looking for, understanding that he took the sell, targeting these equal lows over here. What I waited for was a bit more confirmation, market tapping down into my level over there. I needed about 3% to finish off the verification after my first trade, and I just needed to target up above over there, I think it was. So again, added confluences. I don't necessarily trade only within this kill zone. I understand that my London trading session is from 2 all the way to 12. I'll look for the London Power of 3 setup within this area. Again, it is all fractal, guys. It doesn't have to be the daily candle range. If you see here, market's opened, market's manipulated lower, market's gone up, pulled down and closed. You take that across. Perfect example of accumulation, manipulation, expansion, distribution. And that's all I did. So rejection wick or candle off of my high probability demand zone, with again another confluence of oversold in that area, knowing that we are buy bias for the day. And that is how I managed to finish off the verification. I was in no rush. There is no time limits to a lot of these prop firms. And I just took the simple approach, looking for these levels to get swept, tapping in to my levels that I distinctly mention over and over and over again, being the highest probability A+ setups you can take. Take that trade. You could ride it all the way to the high. You make 3.8% on a $200, $300, $400,000 account. You are done for the month. Why do you need to overtrade? I hope that helps you guys out. Enjoy, and I will catch you soon. Cheers.